So AJ, when I looked at the notes this morning, I saw JOLTS, and I was curious, how much of a impact does that report have on the market compared to like an employment report today, where it has a real significant impact?
Not really that much. But I look at it for a different reason. And here's what I want. So a lot of people, like we saw, focus on those employment numbers that came out today. And all well and good, but here's a rate that I think our viewers should pay attention to. And this is the Bureau of Labor Statistics reports the job opening and labor turnover survey monthly, usually earlier in the week before the employment report is reduced. And there's a rate that I look at called the hiring rate. And you can see it right here. It's at 3.3%. That hiring rate, if you look over history of 3.3%, is a rate that is usually associated when we have unemployment up at like 8%, and that would be considered,
Bad.
we're in dire straits. If we had unemployment rate up at 8%, that would be dire straits. What this means is that we're finding it very difficult to get jobs. Now they say look at table 2. So I did a deep dive and I looked at table 2. Let's see if it comes up here. There it is. And here's the overall, that 3.3% rate, again, abysmal. Some of the higher numbers, they do it by sector. If you're in transportation, warehouse, utilities, in other words, you drive truck, you might be able to leave your job and find another job pretty easily. 6.6% right now in leisure and hospitality. So if you want to go work behind the desk at a hotel or something, you might be able to swap jobs. But folks come to me often and they're like, "Hey, I'm dissatisfied with my job. I think I'm gonna focus on being a trader." Now, first of all, when I became a trader, or when I started trading, was 1997, and I'm going to tell you, I didn't have people like me to be able to latch on to. So I took the long route of trial and error, which I don't recommend to anybody, but it was very expensive and very time consuming. I didn't really see a string of consistent positive earnings from trading until 4 years later in 2001. And I didn't grow my trading nest egg from, its current, at that time it was about $5,000 to where it needed to be to sustain. Even if I pulled back on my expenses, it took until 2005. It took another 4 years of doing consistent trading till I had a nest egg in there that I could then continue to grow, but also live off of. So I continued working at Hewlett Packard, a full-time job, for 4 additional years after I was successful. My point is if you decide to leave a job because you're dissatisfied right now, you're probably not going to get rehired. That's what this number is. This is a scary number. And so I'm almost telling a lot of those folks who tell me I want to be a trader full time, if you don't have, 200, $300,000 accumulated in an account that you can then live off of with your consistent trading, tough it out, right? Because the maybe about a year ago this number was much higher, and I would have said to you, yeah, sure, if you're not happy, leave this job and you don't have to worry about having another job lined up. But they're not out there. And if I were you guys, I would totally pay attention to this hiring rate, not necessarily because it affects your trading, but more based on your own personal decisions. Right now is not the time to be dissatisfied with your job and to move on. because there might not be another place you can be caught to. Make sure you have something in place, and make sure before you decide to abandon everything and become a trader full time that you have amassed a big enough, nest egg that you could not only live on it, but after you've removed your expenses from it, it will still grow, right? If you're not taking money from your trading account and you're just letting it grow because your day-to-day expenses are from your job, that's even better, because then your nest egg is going to grow exponentially. The minute you start taking money out, it's not going to grow as fast. So, this is just my advice for the day, for the beginning of the year. This is not a good hiring rate.
Yeah, and just from that, being around in the financial industry for 20 plus years, I know how difficult it is to quote unquote call yourself a full-time trader, right? I know
Oh,
we had Dr. David Banano on recently,
remember
and
that?
just the psychology of that on a day-to-day basis of being up, being down, having to have that nest egg, having to pay bills with the money, losing the money, like and choosing that as a lifestyle every single day is very difficult. And so that's why I think I would encourage everyone watching, listening to check out AJ's program and check out the webinar and check out the coaching, because like you said, AJ, you didn't have a you when you were starting, and having a
Mm-mm.
you around makes that process a little bit easier. And the strategies that you implement don't require one to sit in front of their screen all day buying and selling. A lot of this stuff is done after market close. A lot of it has very strategic entries, exits, risk, rewards. And we're going to go through a couple of those examples. But, I just wanted to follow up with, being a full-time trader is a very, very difficult job. And it's going to take some time to be successful. But that's why we have the program. That's why we encourage everybody to ask questions, to join, to get involved.